Welcome to our daily Forex range bar chart market analysis. My name is Schimming. This review is for Thursday, April the 11th. Now looking back at the day as we're crossing rollover, we know that the equity markets around the globe had a positive Thursday. Looking at the dollar index, the chart that's on the screen currently, we know that since the Bank of Japan made their announcement last week, and we've had the North Koreans doing some serious saber rattling, we know that the dollar initially gapped up and had a positive response to the yen's weakness overall. However, looking back on the week, you can see that in actuality, the dollar has been setting lower highs and lower lows. We're retracing. We had a pretty precipitous down move on the day. You can see here at the tail end. And we have retraced part of that, about 50% retracement from the highs, the most recent high. But we're still looking at a dollar that, even though did have an opportunity to gap to the upside and participated in some benefit from the weak yen, we do see that overall it is trading down on the week. If we look at my currency strength chart, and in this case I think we should call it currency strength and or weakness, you can see that looking back on the day, the dollar here in green, you can see that it did have a pretty nice day to the downside. As a matter of fact, it was the most declining single currency. It was also one that moved with the most consistency. However, about an hour or so into the New York time frame, we can see that it did level off, and you can see that retracement, which was clearly apparent on the dollar index itself. It was a good mover during the London session. That was really its best opportunity. The yen in light blue. The yen continues to be very volatile. And this little move, this as it moved down during London and as it approached New York time frame, it took a sharp move to the upside. It looked like it was going to have a reversal of fortune, and then ultimately did move down again on the day. Now I know these moves become very dangerous for traders, and it started to make the CCYX look a little bit sloppy, which is undesirable, and we have discussed in previous recordings. But ultimately it did get back into a downtrend, and this movement, in retrospect, dangerous for some traders, a benefit and an opportunity for others. It really depends on how you play the yen pairs today. To the upside, that you can see that the euro and the pound, the euro in red and the pound in pink, were the strongest movers. Today the Swiss was rather flat, and the Aussie, which has really been a good mover the front half of this week, it mellowed out yesterday and has remained somewhat lethargic on the day, being one of the lesser opportunities as we look at the market. Looking at the individual currencies and start looking at some of these yen pairs in particular. The Aussie yen, we'll start with the Aussie yen here in the top left hand corner. We know the Aussie yen has been a very good mover on the week, but you can also see when I blow this view up, remember we're looking at range bars, we're looking at a way to give you a more advanced and straightforward approach to charting and trading. This is a very modern, pure price charting method that's superior time-based, and you can see that we have a very consistent and noise-free charting display, and it really shows from those Thursday lows and the reversal in the yen and the dollar and the activity we saw last week from the Bank of Japan and the non-farm payroll. I guess I forgot to mention that a few minutes ago, plus the North Korean activity. We can see that the Aussie yen did start initially moving to the upside. Remember that yen, that strong yen weakness we saw at Thursday and Friday and last week, and overall it's maintained, and you can see this has actually been a very consistent mover to the upside. However, today very little price activity, starting to consolidate. We can start to see a pretty obvious high range to be concerned about. We're right over the 105 range, and if it drops below 105, then a little bit of a retracement is probably in store. You can put your fibs on there and get a good idea of the 23, the 50, the 38% levels that it could possibly retrace through. That would be attractive opportunities. We look at the Swiss yen, been another good mover on the week. Again, look at how the pair was on Thursday and Friday of last week. Coming into this week, this one hasn't been able to make the advances that we'd like to see. The Swiss has been a little bit more lethargic than the euro and the pound this week, even though the yen is still the one overall moving to the downside. Just like with the Aussie yen, we're dealing with a pair that's right at its resistance line. This one is staying just above 107. And again, I think a mark below 107, then putting your fibs on this, looking at a 23, 38, 50, maybe even a 61% retracement to the levels we saw either swing low at the start of this week, where we were on Thursday and Friday. I would look at Thursday's low to the current high that was set today and look at that as a retracement possibility, some percentage thereof. The two big movers, the most volatile pairs on the week, which has been really the theme for the year. This is no surprise, obviously. Pound yen and the euro yen. Now the pound yen has had some better days than the euro yen. Today was not one of them. We look at again. I've got last week really cut off, focusing more on this week, and you can see that on Monday it was very, very flat. Really, remember it held in that range with that flat pound. We're still creeping up the week. It's still staying above the pivot and staying above the zone. You can see on all these yen charts that the zone keeps staring up each day, but you should also notice that the pivot levels are getting tighter and tighter and tighter each day, which means that the trading ranges are obviously diminishing. We've seen a little bit of a push today, and over this 153 mark, it's holding over 153 pretty well. Made it up to 154 installed, so approaching 154 again, ultimately getting above there, or falling under 153 level would be what I would be most concerned about or looking for on the pound yen for the balance of this week and obviously going into next week. The most volatile, the most actively traded yen pair is the euro yen. You look at last Thursday and Friday's behavior, that strong move on Thursday, the move on Friday that continued and was pushed and helped and assisted by the U.S. non-farm payroll data, or at least that release time frame. And we can see that again, the pivot points have been stair-stepping upward all week long. The pair price has been staying over the pivot level. I suggested yesterday, as these pivots are getting tighter and tighter each day, we were very tight with the consolidation last week, and then with this explosive move on Friday, much wider pivot range, extreme difference from Thursday to Friday, maintain a pretty decent level of distance between the pivot levels on Tuesday and on Monday, and then going into Tuesday, Wednesday, and now today we've gotten tighter and tighter still, and its ability to stay over the pivot and remain and not break either below the pivot range or above S1, R1, R2 is becoming increasingly difficult. But the pair is definitely starting to consolidate, losing some momentum, and obviously traders are scratching their head on what really may be happening. The volatility of the yen today only adds to that confusion, because overall we had seen the yen moving down, but again, it's made a couple big sharp moves to the upside, and I think that's surprising some traders, because fundamentally it really doesn't make sense for the yen to be moving higher. However, I constantly speak to you about the fact that our job as traders is not to try to predict what should be happening or think that we know what should be happening, as much as it's analyzing the possibilities, both up and down and sideways, looking at the key levels that we need to see those triggering points or areas of support or resistance that we should be most concerned with near term, and then making our trade decisions based on what's actually happening. So here we've got a pair that's trading between the 130 and 131 levels. It got above 131 today. It's in the mid to upper 130 range right now. That 130, that 129, those become big levels for the pair over 131, and we can look for some further activity. The CCYX, utilizing our charts, utilizing this pure price analysis, using the simple tools that we deploy to make our decisions, can sometimes very much clarify what you're doing, give you a cleaner, clearer, better indication for both entering and exiting your trades, so that you can become a better trader long term. It's really incorporating what you do and teaming with what we do to help you become more well-rounded and improve yourself overall as a trader. The move on the day, really from the New York time frame, which really kind of wimped out, was the euro dollar. But early in the session, the London session, and coming into New York, we know that the euro dollar was very volatile and has made a tremendous move to the upside. If we blow up the euro dollar, the euro dollar, I'll put this on like a 12 pip. I just really want to look at the last couple of days, because again, we started out and we saw the dollar benefit from the poor yen performance. We saw the dollar benefit from the non-farm payroll data. And let's go and we see, if we move this down, Here we go. We saw, surprisingly, how the dollar wants to move on some news fundamentally correct and some news what I would consider not fundamentally correct. But we've had some pretty decent volatility to the dollar the last couple of days. It's actually moved fairly consistent, and you can see that here during the London time frame coming from the Asian time into London. We saw it move back going into New York, and it's really kind of mellowed out. But you also have this double top that's taken place. So we've got a pair up here. This is 131.38, and we've got 1.3137, these two tops. So obviously you have a pretty set line of resistance, but we do have those highs that are trailing higher along the way. So we're getting into a quandary where the trend line to the bottom side is moving higher, and the 3100 I think is the key spot, which is right where it's at. It's kind of funny, these pairs are all trading, most of them are trading, or several of them are trading right at their figures, and dropping below those figures I think would be a pretty substantial indication for some type of retracement, even if it's a mild, 23% or 38% retracement, something in that range. I think there could possibly be due for a nice retracement, of course breaking above this resistance range. 3140 plus on the euro dollar would be a positive move. You'd want to take a breakout trade on that, really letting it break above and pull back and prove that that 31.40 range is support, and then taking the trade off of the support range, if you will, and benefiting from the price action from that area. So that we have some really good opportunities. We continue to see this yen treating us with some overwhelming or abnormal volatility. I would like to see a little bit more consistency on the CCYX view, but the opportunities are still there. The pairs are starting to peter out. They're starting to lose their momentum, if you will, and we've got some clear resistance and support lines. I think just about every pair you want to trade, you have them trading at a support, very near a current support or resistance level that's been established this week. In the yen pairs, we're at some pretty lofty ground, but yet we've got the reasons and the excuses and the fundamentals to see them potentially moving higher. But we also have traders that are looking, and we've seen every dip on the yen's been met with some buying action too, which is what's creating those volatile opportunities. But we've also seen some action in the options market. We've seen some action in the futures market. There's several things that are happening right here that really make me think that the pairs are kind of winding up and not winding down. And as I always say, the longer something consolidates, typically the greater the move that from that consolidation is. So it wouldn't be a bad thing to see these pairs consolidate for the balance of the week, diminish our trading opportunities, if you will, but increasing the opportunities as we go into next week. And it really comes down to a management situation. I've actually myself managed a couple trades poorly today, where I should have been looking to take the gains off and move some stops and get a little bit more defensive and capture some gains along the way, as opposed to letting some gains reverse and leave me with very little as far as the profits on a couple of the trades today that were definitely clear opportunities. Made some mistakes and broke some rules that I myself teach people to do all the time, but that just proves the reason that you need to trade with a group and that we need to have constant education. We need to constantly remind ourselves of the things that we should be doing. We know we should be doing, but that doesn't mean that we are going to do it right every single time. You can't eliminate the mistakes. What you want to do is strive to do better. We were talking about that in the room today. My desire is not to be, my potential is not to be a perfect trader. My potential is to become a better trader. And if this interests you, and if you want to look at some very sound and some proven, some simplistic ways to approach the market and hopefully take some of the edge off on what you're doing, bring your tools, integrate with our tools, and let us show you our way of doing things and incorporate it alongside what you're already doing, I think you'll find yourself having a much cleaner and better opportunity to make decisions in the marketplace and ultimately become a better trader. That really is the point, is it not? And so each person that you talk to and each type of system that you look at, everybody has their strengths and weaknesses. It is really your job as a trader to find the situations and the opportunities that make sense for you and that are a fit for you. And I'm once again today offering you the opportunity to come sit with us. We're going to set up the guest sessions. I believe we'll have them started in the next week or the week following. Have you come in for a couple weeks, spend some real quality time with us, trade some sessions with us, take some training classes, look at some of the recorded class videos that we have, talk about some of the strategies we utilize, and look at our software and how we approach the market in a much cleaner, much more sensible, much more straightforward, a much more advanced view, but in most cases probably eliminating a lot of things that you look at. So many traders look at too many things. You're becoming too dependent on tools. You're looking for, too hard, looking for the holy grail that quite frankly just doesn't exist. You need to become the trader. You need to become the indicator of righteousness. You need to become the one that is well-rounded, who understands how to approach the market and knows, again, I can't be perfect, I can't be flawless, but I can do better and I can raise my win percentages. I can become more disciplined, more consistent, and more patient. And I, in fact, can become a better trader. I'm willing to help you. Our system and our software will become a great ally and asset to you on a daily basis, and I want to have the opportunity to do just that. So send us an email. Drop it to info@fxrbc.com, and we will get you set up to come into the guest sessions. And again, additional information or schedule the free trial, send an email to info@fxrbc.com. I'm Derek Schimming with ForexRangeBarCharts.com. As always, you have a great day trading. I'll see you on the floor and for further recordings. Thanks.